following is a presentation of TFNN. Nine Before 9 with John Logan. 9 minutes on the stock markets before 9 a.m. every trading day. Call now, toll free, 877-927-6648, or internationally, 727-445-1044. Now, John Logan.
Hi guys, welcome to 9 Before 9. Good to be back. Let's get right into it. The dollar, we're going to kind of focus on this for a little bit because it affects everything else for the most part. Talked about trying to lever this 123 down into 99.60, 63, 64, I believe the number was. We're going to look at that in a second, but that trade is over right now. The dollar short right now, you just got to sit tight. We kind of reached our targets finally. Here's the weekly view on the dollar. There's that big number we were looking at forever, 99.63. So, what do you do now? I think it's time to just sit tight. The reason being is you don't really have any new information on the daily, but the 240, you've got some new demand down here. We could rattle around in a little bit of a range there, so keep that in mind. We're going to reference gold looking at all this. And yesterday we talked about, and here's the weekly, just to review this, 1,300, that target that we finally reached on gold, that big psychological number. Not a huge fan of being short gold, but the writing's on the wall here. You've got to step off the gas pedal on the long side for a little bit. The big numbers to be aware of, 1273 down below, kind of the dig in and buy support area, and then breakouts above 1292.5, of course, as you can see on the daily with that profile in force today. So the action on gold, and let's just take a look at it. Past here's the 60-minute on gold. We've pretty much completed the entire cycle of a huge profile on the 60-minute. I don't know if you can see that. Excuse me, folks. So we had a new profile appear. We've completed the whole cycle. We've got a pretty thin profile here. So we don't have a lot of reaction to the dollar, actually selling off here and gold defaultly kind of rallying. So, that's the kind of writing on the wall that I'm looking for, that there's really zero reasons to be in gold right now, except for just kind of a wait and see, again, to those major inflection points. Taking a look at the Treasury, the 10-year, we finally get into that neighborhood yesterday, 126.23. This trade is over from the long side. I'm relatively comfortable shorting against that, as we talked about previously. And as we look at this on the daily, it'd be nice to see a new profile happening up here on the daily, but that's just not happening yet. But again, the weekly stake is in the ground. We've kind of gotten to that neighborhood and come off. So again, the 10-year trade's pretty much over right now on the long side, and I'm actually feeling a lot more comfortable to short this if I can just get some more kind of harbingers of bad news for the longs here up top. The VIX didn't exactly bounce off that 15 like we were talking about yesterday, and the market has obviously rallied a little bit here, so that number did not hold, and that's okay. The Shanghai, we reached those targets up top on this trade. We talked about, that was the okay area to take off the longs and look at some short opportunities. I still feel that's the case. We're probably going to cycle down a little bit farther before we find support. We did find some support yesterday, 34.24. But again, I think we're probably going to revisit that before we head higher. Silver, talked about this one, just kind of waiting for some information from gold. I think silver's actually hanging in there quite well. That big 1814 area we talked about yesterday was kind of the general area to kind of look at from the long side, trading support there. We've got another kind of reason for support down here at 1810. So held up quite well, but I'm looking for gold to kind of back and fill a little bit farther down. So beware of buying silver yet until we get some indications that gold's kind of cycled through that fair auction. If silver hangs in there while that's happening, I see all the more reason to trade silver from the long side, actually. We're going to take a look at the XLF. And going to participate a little bit this morning in the gap up, but not the ETF du jour right now. So I still don't think you can really kind of look at the XLF to try to buy anything on a long-term scale right now. The XLE, here's the good news on the XLE trade. I think we're down to support again, 68.45. This is our XLE. We're not open yet. Actually, we are open this morning. 69 we're trading right now. So we're pretty much on support on the XLE right now. We're going to reference crude relative to that trade. And this is the situation on crude. So kind of back in support 52.21, that XLE is sitting right there on support. So finding XLE stocks within the scanner might be the more appropriate way to trade trade crude right now. So let's take a look at the XLE, and let's try to find some nice little nuggets here. Let's take a look at KMI. Let's take a look at a couple other ones. EQT, really nice trade here, and WMB. Let's take a look at the weekly on WMB. Yeah, this is not a bad looking situation in the XLE sector right here. We're going to also reference IBM. This is kind of the stock of the morning, the nightmare of the morning. Trading about 160, down about 5%. None of these charts are going to reflect that morning print there. So trading about right here. So if you're going to try to pick up IBM on sale, 156 or 156.80, 156.69 might be something to wait for. There's really no way to trade this down here unless we get into some inflection points that we can count on from the past. We're going to take a look at Apple before we leave here. This is the situation on the long term on Apple. So I feel relatively good that we could actually see 138.33 weekly profile. Talked about first time we had a chance to take our foot off the long gas pedal last week. That, again, new profile attempting to appear. So really thin profile. We could break down here on the weekly, which would kind of be nice to bank some shorts and some people start panicking. But right now, kind of turning the rents the same way. You got to look at 138.33 as support on Apple. Whew. Guys, you've been great this morning. Stay tuned for Larry, Basil, David, Tom, Steve Rhodes, the rest of the crew. And you guys have a great trading day today. And be sure to call in anytime during these 9 minutes on any morning. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.